Hey everyone, welcome to the KE Report, an update from Borealis Mining. The last time I had this company on was an intro interview back in early October on the back of the company's second gold pour from the Borealis Mine project in Nevada that the company holds. The company just went public back in August. We are going to be recapping some drill results, an expanded land package, all from the ongoing exploration strategy and the 2 year plan that the company has to move forward with really expanding the resource and preparing for ramped up production. I am chatting with Kelly Malcolm, President and CEO of Borealis Mining. Company is traded on the TSX Venture Exchange under the symbol BOGO and now in the Frankfurt Exchange under the symbol L4B0. Kelly, let's start off with the drill results from the ongoing 3,500-meter drill program. These results come from the Graben Deposit within that project, headline number being little over 4 grams per ton gold over 21 meters, as well as a longer intercept of 99 meters of 2.25 grams per ton gold. Kelly, give us a little background on this Graben deposit all within this Borealis project, please.
Sure. So Borealis historically is and was an oxide heap leach operation with near surface oxides. Below some of those deposits, sulfide mineralization was identified, oftentimes in quite high grades. The Graben deposit sits just west of what was historically the highest grade open pit mined on the property called Freedom Flats. Graben was first identified in the late 80s and then worked on most through the 2000s by the predecessor company, Griffin Gold, that owned the project. They drilled some spectacular holes and put it into a resource. It was part of their 2011 pre-feasibility study as something that was not fitting into the economic plan at the moment, something that was further afield, but it did outline a body of better than 800,000 ounces of gold. Again, this is non-compliant, but from that 2011 pre-feasibility study. So there's a large body of gold here. And our thought in drilling it, Corey, was we wanted to, number one, validate that it was consistent gold, that there was high grades present, that it was something that we could look to exploit in the future. Also, what we're doing with some of the mineralization that we drilled is we'll be doing additional metallurgical work on some fresh ore. And the plan eventually is to get underground and start mining this. And we're already permitted to exploit this mineralization. And what we would do is we would go to the bottom of that Freedom Flats pit, and the permit actually enables us to build a little bit of a portal and then a ramp from the base of that pit over to this Graben area. So pretty interesting, quite advanced. And we were very pleased with the grades that came out of the ground during this program.
So, Kelly, what would be the process here? You have this historical resource. Would you be updating this resource first? How hard is it to update that resource? How much work would go into that? Or would you go right into this underground bulk sample? Sounds like more test mining.
Really, what our near-term goal is, Corey, is to resume the oxide heap leach operation. This is something that is a bit further afield. I would say it's something that we start looking at once the production at the oxide project or deposit starts off in earnest and we're into free cash flow generation. So it's something that we're looking at maybe 2, 3, 4 years down the road. But I think it's quite interesting. We're going to start building a plan around it, but it's not something that we're going to be looking at in the next year or so.
Okay. Can you just remind everybody about what the path looks like then for that oxide production, the ramp up to cash flow?
For sure. So, in a pretty simplistic manner, we've got our current heap leach pad that we are producing gold from on a mostly residual basis. We have started putting cyanide onto that pad, so we're generating relatively consistent gold pours. In fact, we're hoping to do one this week. And what we would do then, following the residual heap leaching, is we've got a stockpile of about 330,000 tons. We'll crush that material, place it on the pad, and that'll be sort of a baby step into resumption of production. And in terms of actual production, we are fully permitted, although we don't have a compliant resource. So it's challenging to give a forecast as to production numbers. So what we'll likely do is resume production and report on a quarterly basis what our actual costs were and sales were, and that'll be the way for investors to keep track of our progress in the interim before we update that resource, like you mentioned.
Now, what is the road to updating the resource? Do you have any insights on how many meters you would have to drill?
So we've probably got sufficient information on the Graben project. We would need to do some additional confirmatory drilling essentially across the project. It wouldn't be too much work. Really, I think, Corey, we'd be better served once we start our real regional exploration campaign, which is planned for the summer of 2025. I think we'd be better served updating it, or investors would be better served if we were to update it following a discovery or a meaningful addition of ounces to the system, because historical one is not all that historical. It's from 2011. Yes, inflation's changed, but also the price of gold has gone up relative to that inflationary shift. So I think that there's a reasonable amount of validity in the 2011 report that's out there. So there's something to look to for investors at the moment, but we do intend absolutely at some point in the future to update that document.
So I guess the nuance here being companies go through resource estimates and even economic estimates more to de-risk projects to fund them because they need money to fund them. You're in a bit of a different spot here with this project and this historic mine because are you looking for any sort of significant funding to ramp up the production?
No. So just like you said, they often call a feasibility study a bankable feasibility study for the reason that you can go to the banks, you can get production loans or development loans. In our case, all of that money has already been spent. All the infrastructure is in good working order. Electrical's in, water's in, permits are in, our ADR facility is all in place. So no, we don't need it for that purpose, but we would just like it for transparency and so that investors can follow along with our progress. That's really the only reason to do that at this point. But I think it's an important thing to do at some point.
Okay. Can you also just provide a bit of an overview on this 3,500-meter program? It is ongoing. We have these results from this Graben zone or Graben deposit. Where else are you drilling within this program?
Sure. So now we're not now, but we have been focused and we continue to be focused on near surface oxide, again, confirmation, but also expansion. So we're working on the western portion of the project right now, near another area of historical production. It's on our presentation materials as JRCD, which stands for Jamie's Ridge Cerro Duro. Right now, we're drilling on the Cerro Duro deposit and looking to expand it as we think that's quite a meaningful area that we can actually generate some new ounces from.
How many deposits are there on this project?
So there's 8 historical pits. Arguably, Corey, I would say that there's really two sort of trends. So the main Borealis trend, where we have our Freedom Flats pit, the historical Borealis pit, East Ridge, Northeast Ridge, and one called Deep Ore Flats. And then over on the west, we have the JRCD area. So really, it's kind of two distinct deposit areas, I would call it.
Okay. There was also other news at the tail end of October that announced the expanding of this Borealis property through staking. You expanded the project by a little over 3.5 square miles. That added to the existing almost 23 square miles. Talk to us about the strategy and where this staking occurred to expand this project, please.
Sure. So it's just east of us, directly east of us, and contiguous to our current package. As we were compiling all the historic data, we came across a bunch of maps showing grab samples and historic drill holes to the east of our current bounds. There was some really nice grab samples, multi-gram material, all oxides sitting right at surface, and some drill holes that showed reasonable grades of, call it half a gram and above, over 20 plus meters, again, right from surface. So it represents a genuine bona fide oxide gold deposit that we can work to expand and potentially bring into the production profile. And as you know, staking is by far the cheapest and easiest way to acquire potential ounces. So we were really excited to see that and jumped at the opportunity and staked that as soon as we could.
Where is this going to line up in the pecking order in terms of future drilling priority targets?
So in Nevada, what you have to do in new areas that you haven't worked before is you've got to do what's called a plan of operations. And that involves some biological studies, some archaeological studies, and this is even ahead of a drill program. So we plan to initiate that in the spring of 2025. And that would put us at drilling that and working it at some point, probably towards the latter half of 25 or into early 2026.
Okay. Just give us a bit of an overview of who else is active in this area. You highlighted in that October 29th news release, and I know my audience is going to know these companies' names. So break down what's going on in and around this Borealis project, please.
For sure. So our neighbors to the south are Headwater Gold. Headwater recently went on a big staking rush and staked up directly to our southern border. And the neat thing about them is they are partnered with Newmont. Originally, they were partnered with Newcrest on the project. Newmont, after the Newcrest acquisition, has been aggressively funding this project. They've identified some really nice low sulfidation epithermal type mineralization and think that they're onto something quite special. So it'd be really amazing to see them come up with a really significant discovery. Also, there is Heckla, and Hecla's got a project called the Aurora Mine, which also has a fully permitted, although it's on care and maintenance, mill with a wet tailings facility, which is the only mill in and around the area. So there's lots of big hitter neighbors, and they're becoming quite active, particularly Headwater and Newmont.
Well, Kelly, before I get you out of here, then, I guess news flow wise, we're going to be expecting more drill results from this ongoing program. Anything else we should be expecting? And please update my audience on the company's capital position here to continue to move forward this asset.
Sure. So yeah, the drilling results will be coming out. I'm sure I'll get at least one more out before year end here. You can also look forward to news on gold production as we continue to pour. We'll keep the investor audience updated on the production profile. We're also working, and part of our strategy is M&A, Corey. So we're looking at a number of different projects. So at some point in the future, we hope to get one of those deals closed and announced to the market once we get there. And in terms of capital, we're continually generating revenue. We expect to file our financials as of July 31st next week. So keep an eye out for that. But we've got a healthy cash position and we're continually supplementing it with gold pours.
On the M&A front, what are you looking for? Are you looking to acquire ounces? Are you looking at other historical mines? What's the strategy? And will it continue to be focused in Nevada?
Yeah, that's a good question. So, yes, Nevada focused. Yes, acquiring ounces. We would also consider acquiring mines. We're not looking for exploration properties, although we are looking for ounces with exploration upside. What we're looking at is a little bit different from your typical M&A target. So we're not looking at things that majors want, which is typically better than 1 million or 2 million ounces that trade at a big premium because they're premium projects. We're looking for smaller assets, kind of 500,000 to 1 million ounces, that have high margin mineability, and we think that are mineable in the near term. So looking for things that are often forgotten about or perhaps in major companies' portfolios that they're not looking at or considering advancing anytime soon because they wouldn't be material to their balance sheet. And the rationale there is we can potentially acquire some of these things for under 20, $30 an ounce in the ground that can yield significant cash. And if we put a few of these smaller assets together, number one, we de-risk the single asset, running a single asset company. But also, if you put a few of these mines together that generate 20, 15, 20, $30 million per annum free cash flow, that becomes a really significant company quite rapidly. And a lot of these smaller assets too, the other great thing about them is CapEx is quite low. So under 100 million, under $50 million, 50 million US to put these things into production. So you can finance these yourselves without having to dilute shareholders too much, without having to take on big debt. So that's our strategy. It's a little unique, but I think it's going to be quite interesting once we start executing upon it.
All right. Kelly Malcolm, President and CEO of Borealis Mining. Kelly, thank you very much for the update. Everyone, click the link in the show notes to visit the Borealis website and email me any questions you have for Kelly. Kelly, thanks for your time today.
Thanks, Corey.